Good afternoon, traders. This is Tony D from easyMarkets in Sydney. We have a very wild and volatile market that's continuing again. Friday saw the major sort of downside volatility in the US session. Stock markets hit fresh intraday lows anyway, down to around about 23,300 before snapping back 1,000 points into the close. Really, really strong close. It has alleviated some of the fear and the pressure. You can see that coming across on the Aussie dollar as well. Had a nice little bounce in the final couple of hours. And we are looking at ourselves comfortably back above 78 after testing that key 77.50, 77.60 zone on Friday. Huge falls. Look at the size of some of these candles that are coming through last week. This is how the Aussie reacts when there is stock market selling. Really catch the bulls on the wrong side and just flips them into some major sell-offs. Now it can still continue. We're not out of the woods just yet, but a little bit more positive feel, at least so far today, and that positivity is coming through across most markets. Also, in terms of the other pair that a lot of traders have been trading lately, Bitcoin's also stabilizing. A lot of higher lows on the 4-hour, and that's definitely necessary when you are looking as for a trader to get back in on the buy side, given that the longer term is still upside. It's just that huge little rally we've seen in December has to be worked through as well. In terms of the pound, was a little bit more hit than most on Friday and hasn't really recovered a lot of its gains just yet that we saw post the Bank of England. The fact is that Friday's comments from the EU Brexit commissioner there that you know the deal wasn't done yet, and this has led to the market being a little bit more skittish than usual. Like stock market selling in general will hurt the pound, but having concerns about the Brexit transition deal getting passed by the deadline, which is by next March 22nd, I believe, then there is another reason opening up the door to sell. Also, the market has some really positive news from that Bank of England moving towards raising rates. Caught a lot of traders by surprise, so a little bit of a stop hunt as well. Really, the next move is basically due to the US dollar strength or weakness from stocks falling or rallying. The long-term outlook for the pound is really, really good, but short-term, because a lot of little hurdles get passed, and the price action you can see is obviously negative. So just be a little bit careful if you're on the bullish side of the pound. I know a lot of you traders are. You know, while the long term is looking nice, we still got to keep an eye on those downside risk, which is really, you know, Brexit headlines of no deal or transition deal being in doubt, or US stock market turbulence.